Well, we've seen external reserves fall yet again. We're sitting at $33 billion at the end of last week. Run us through influencing factors here. Would you say that the central bank's Forex sales has been increasing in recent weeks and that the major culprit?
Okay. The demand at the CBN window has softened from levels we recorded in August and September. And last week it was about $500 million. Like you said, the reserves has fallen from 34 billion to 33 billion, though this is still enough to satisfy 11 months of import cover. The factors affecting the reserves goes beyond the FX, weekly FX sales, because we recently just gathered that the sovereign debt note servicing is also done from this account. So a couple of factors will have to be unearthed to account for the move in the reserves.
Well, we've read about new restrictions relating to the sale of dollars at the CBN auction for certain transactions, and it seems like the central bank is looking for new ways to reduce dollars reserves and protect Forex reserves. Tell us more about those new rules. Do you have any detail on that front?
Okay, the restrictions are not new. They've been around for a while, and the last modification to the rule was actually in July 2007. What the central bank has done is to remind banks that FX for unconfirmed LCs should not be purchased from the central bank window, but from the interbank market. You would recall that we were coming from an era of retail DAS between the period of January to July 2009. At that point, all forms of official FX demand was presented to the CBN window, and the interbank market was also closed during the same period. So what the central bank is doing is that with the return of the wholesale Dutch auction system, they are reminding the market that that rule is still in place. Now, what the market has positioned to the central bank is, if indeed all this demand has come to your window since the return of the WDAS auction, you have been able to meet this demand and have kept true to the desired exchange rate levels. Would you then be looking for a huge margin between the interbank rate and the WDAS rate? So the CBN is looking at this, and market is engaging, and we expect feedback on the reminder sooner than later.
When it comes to exchange rate levels, what's your outlook for the naira at this stage? It has shown some weakness against the dollar in the interbank market at around 151 naira 40.
Okay. The weakness is directly linked to the circular, because customers who have been affected by the circular, it appears they are bringing forward their FX demand to the interbank market for fear of further depreciation. All company flows has helped to soften the effect, because you would have expected a larger depreciation in the interbank market. We've seen about $800 million coming to the market over the past week, so this has helped trade. For instance, during the course of trading yesterday, markets saw a low of 150.95 on the back of significant all company flows, but the demand from the unconfirmed LCs later affected market, and that's what caused the closing rate of 151.40.
Well, a quick look at activity, Yetunde, on the bond market. I mean, what's the mood like amongst traders? Because we know that next week presents the last bond auction.
Okay. Traders are eagerly awaiting the bond auction. The DMO is offering 3, 5, and 20-year bonds. We expect the rates to clear at higher than the last auction and higher than the secondary market rates. 3 years currently trading at about 11.74. The 5 years at 12.5, then, and the 20 years at 14.45. So we'll probably see rates of 12% for the 3-year, 12.5 for the 5, and about 15% for the 5-year. There was some activity during the course of trading, but closing prices did not show a significant move from the previous day closing prices. So the auction will be the major game changer and spike and activity for the end of the year.